little bit, so we'll monitor that as well. But I'd like to welcome in TD Ameritrade Network contributor Jenny Horn to the show to talk some Nordstroms. This has been a roller coaster ride, to say the least, over the last 3 years here, Jenny, in this name. JWN has gone through some peaks and gone through some valleys to oversimplify it here a little bit, but the last year has been very, very good for Nordstrom's investors. And so when you're looking at this company, one that has a little bit of exposure to the discount model through its Nordstrom Rack, and of course, the traditional kind of brick and mortar department store with just its traditional Nordstrom's brand. Jenny, what are we looking for here when we're going into earnings?
Yes, this is a fun one, especially in terms of really the chart. I mean, the stock is up over 120% over the last 52-week period. But then when you zoom out, it sort of paints a different picture because so many of these traditional retailers really had a rough go about it for the last few years, even prior to the pandemic. And you can sort of see that reflected in Nordstrom's 5-year chart. I mean, they're now right 80% off their all-time highs of about $67 a share. Now, they did hit lows of about $11 a share, so a pretty wide swing there. But you can tell from that chart, they're still not really back to levels they've seen since 2018 or even 2017. So although they have seen this rebound from 2020, which was a brutal year for them, they are still so well below their all-time highs. Now, as far as earnings go, analysts are expecting a loss of about 53 cents a share, which would actually represent 70% year-over-year growth on sales of about $2.9 billion, which would represent about 40% year-over-year growth. Now, they have seen a pretty nice streak of earnings beats, with the average surprise for the last 2 quarters being over 1,000%. But I think it's important to keep in mind that despite the fact that they're expected to grow their revenue about 40% year over year, estimates are still expecting a decline of about 10% from the first quarter of 2019, meaning this company is still not back to their pre-pandemic levels, which is a huge concern for a lot of investors. Now, according to reports, about 25 different states have 40% or more of their residents fully vaccinated. So as this number continues to decline and as the U.S. economy continues to reopen, this is obviously a positive for Nordstrom. Now, really, core apparel sales may not be back to full levels, analysts believe, until we see more and more people return to offices and go back to school full time, because that is a huge bit of their moneymaker. Now, for the previous quarter, which they reported back in March, they reported revenue of about $3.6 billion, which was still down about 20% year over year. And to sort of break down all of their brands, their traditional Nordstrom brand was down about 19% year over year, with Nordstrom Rack being down about 23% year over year. Now, digital sales rose about 24% and now represent 54% of their total sales, which actually, relatively speaking, compared to other retailers, is not exceptionally high. Now, 10% of their online orders are now getting picked up in store. So that all seems like they're sort of moving in the right direction, just a little bit slower than so many of these other retailers we've discussed on the show. Now, margins are also a huge concern for Nordstrom, as their gross margin was down 33% year over year in the fourth quarter. And this is just due to their lack of scale and a lot of markdowns they're seeing. As we know, Nordstrom is a high-end retailer, and having to mark down some of these very expensive products has really weighed on them. And that brings us to our first tweet today, which doesn't believe that Nordstrom has much more room to run. So our first tweeter says, "Sold designer brands and some Nordstrom. I was slowly adding back. I own no more retailers. They've run up so much, it's irrational at this point. Stimmy ends and people get back to spending money on experiences and vacations." Now, I thought what was interesting about this tweeter is just the run up so much it's irrational, because actually a Morgan Stanley analyst today had a very interesting report on Gap specifically, but something she said I thought applied to Nordstrom as well, that a lot of these retailers are reporting objectively really strong earnings. They're being on top and bottom line, they're raising their guidance. However, they're actually seeing selling following their reports, just because a lot of this positive news and stimulus is sort of already priced in. So I think that could be a concern with Nordstrom, just given the retail patterns we've seen over the last few weeks. But our next tweeter actually challenges that, and I actually thought they brought up an equally as good point, which says, "Level 2 thinking, what about buying clothes for said vacations? Folks have become fitter during the pandemic or gained weight. Either way, need to buy vacation wear post-reopening. They have a lot to run, especially Nordstrom, as an imminent bankruptcy was priced in during the lows." So it is sort of wild to imagine Nordstrom trading at $11 a share back when they really hit their lows in 2020. And I do think that's important to keep in mind. And I think this is sort of why I even highlighted the 5-year chart, because it has run up over the last 52-week period, but it is still below 2018, 2017, which to me gives me hope that, there is still room for this company to come back. They're still below pre-pandemic levels, which you can see on a chart. So I would say that, just having been to Nordstrom recently, it was packed. I still have some faith in Nordstrom for the long term, Kevin.
Jenny, there is a cup half full, cup half empty look at Nordstrom stock right now. Cup half empty means, the stock's already run, like you said, 100 and some percent. The cup half full is, without a doubt, this stock is still only halfway to its highs. Now, the recovery and the problems with malls are well documented. That said, Nordstrom's got kind of all the bases covered. They've got the full price in the affluent malls that do pretty well. They also have Nordstrom Rack. They also have e-commerce. So they seem to have a lot of bases covered. And this is not a very large company. This is remarkably small in terms of the flow to their stock, in terms of the overall size of the company. So they can be lean and agile as they move in and out of different businesses in different areas. So I don't know what's going to happen after Nordstrom, announces their earnings. The Kohl's news is a little alarming when you look at the stock action there. So I think you have to be careful, but this is certainly one with a lot of good stories. The question is, has it run too far, too fast, guys?
Yeah, and I wonder too how much Kohl's and Nordstrom's customer base overlaps, or if those are just completely different markets. So I guess we'll have to wait and see. But Jenny, great setup here for us as always. Look forward to talking to you again soon. As we say goodbye to Jenny, I want to welcome in the co-founder of LikeFolio.com, Andy Swan. Good morning to you, Andy. This is a fun one to unpack here as we're starting to see this transition back into reopening. We see excitement. People are going to want to go buy those new clothes for going out with their friends again. Summer months are ahead of us. There's a lot of reasons to be optimistic about the space, but is Nordstrom's going to be a winner?
Yeah, it's really tough. When we look at overall that reopening trend that you're talking about, so people updating their closet or going out and getting those new outfits that they want for when they can finally go back to restaurants or on the vacations like we talked about. We do see some unseasonably high demand for just general, clothes buying or fashion shopping, up 11% year over year in kind of a period of time where normally you just don't see that. So that's definitely good for this company. But on the other hand, when we stack it up against peers, it really falls right in the middle in terms of purchase intent growth. LikeFolio purchase intent growth is the number of people talking about shopping at these stores. And against peers, it just kind of falls right in the middle. It kind of falls almost exactly on that 11% growth line. It's just exactly kind of what you would expect. They aren't really outperforming. That kind of surprises me a little bit with Nordstrom, just because, this is a company that historically has been you would think would be a big beneficiary of things reopening, because they've really prided themselves on the in-store experience and the customer experience and the service that they're able to give that they weren't able to replicate online. So I would have expected Nordstrom to actually outperform peers as things reopen. And so far, it looks like it's just kind of a cork in the stream and just riding the tailwind a little bit, but really not taking big advantage of it. So like you guys, like Kevin just talked about, like Jenny said, this is kind of a big coin flip going into this earnings. I think, 2 of the last 4, the stock has been up the week of earnings, and 2 of the last 4, it's been down the week of earnings. It's just a really tough call. It's right at that midpoint of the 5-year range, like Jenny was bringing up. So really tough call. I don't see anything outstanding about Nordstrom that gets me super excited about buying it after such a big run that it's had in the short term.
Andy, is there something to be said in your data for Nordstrom hitting a solid single up the middle for this quarter. And, guiding better and putting up solid numbers and saying everything about our company's getting better. Nordstrom Rack, pretty solid numbers. Macy's was beat up a lot more than I think Nordstrom Rack was. And Macy's, if you look at the overall float in this company, is about double the size of Nordstrom in terms of the number of shares outstanding. So Nordstrom is a pretty small company that seems to just be not going for the home run, not throwing all their money out there. They're very conservatively run. And I think, is there something to be said? Is there something to be proud of? A good solid single in this environment. And we're not going out over our skis. We're not getting extended. We're solid and we're in business and we're in, a lot of people wrote these retailers off during the pandemic. And, some of them, like we thought, have made it through and now they're a slow but sure story. Is there something to be said for that kind of rhetoric, Andy?
Yeah, absolutely. I think, that this is a company that kind of, as the industry grows, they will go, and they've kind of found their spot and are doing a decent job. It kind of acts like a company that really doesn't want to be public in a lot of ways. I don't think that the executives are extremely enthusiastic most of the time after these calls. It's not, there's just not a lot of hype, which can be good. Like you're saying, it can be good as long as they can deliver those singles, and I do think they will here. It's just, if you're wanting to compare it to what Macy's reported, that those are two different animals, and Macy's data definitely looked a lot stronger than Nordstrom's going into their report. So I think you just have to take a little pinch of salt or with this. I don't think that Nordstrom's going to blow things out and really make new highs. I don't think this is the report that's going to get them there. I don't think that these are the executives that are going to be that optimistic. But definitely a solid company that just kind of rides the industry trends.
Andy, is there any data on things like Trunk Club? I know we talked Stitch Fix over the pandemic and some of those things picking up. And then also, is there something to be said about the product mix? Nordstrom's, at least from my experience, seems to be on the higher end in terms of price point. And from what we've kind of analyzed and seen over the last year, that kind of part of the economy has done a little bit more consistent, a little bit more solid. That hasn't been as impacted in terms of job loss. And so is it possible that what Kevin's saying is kind of expected because its customer base has been less impacted in terms of, I guess, uncertainty of wages?
Yeah, I think so. And then you look at, Trunk Club, which is their competitor to Stitch Fix, with the personal styling and shopping for clothes. We actually see mentions of that lower by 60% year over year. So I think that's been a little bit of a disappointment, especially during some of this lockdown stuff where you couldn't go out and shop. You kind of had the feeling that people might shift to that, but really doesn't seem to have happened, especially for Trunk Club. Pretty disappointing there. So I don't think that Nordstrom's really going to have much good to say on the digital side of their business. I think that everything that they have to say, if they're going to put out a really positive note, is, like you talked about, the demographics of their customer base and the reopening optimism, and that's where this company is designed to thrive because of its customer service touches that it can put on each interaction with customers. So, we'll see how aggressive they are about being optimistic into the future. Generally speaking, this isn't a company that likes to get too far out ahead of things. So we'll just have to see. I'm kind of expecting a little bit of a muted reaction to this report, to be honest.
Yeah, and so Andy, as we kind of sum things up then, it seems like, and please correct me if I'm wrong, you expect kind of a lackluster result. And if you had to kind of pick a side where you're comfortable with the risk, it seems like because of how these business kind of silos are firing right now, you're not that worried about the upside, at least for the short term.
Yep, that's exactly right.
All righty, well, That's good for us here. We appreciate it. Mr. Swan, we'll talk to you again soon, the co-founder of LikeFolio.com. Always a pleasure.